Cash flow is king. Yes, I agree. If you were to buy right now with cash flow as the primary factor, which market would you invest in? If I were just looking for cash flow, like I said, Ohio, Michigan, Kansas City, St. Louis, I like to be in areas, if I'm just looking for cash flow, I want to know that that area is still growing. So you might be able to find cash flow in a place like Jackson, Mississippi, but I'd need to see that there's job growth and population growth. Otherwise, it just scares me because if you have to fix your roof or, do the normal maintenance on the property, you're not getting any appreciation to offset it. And that just, again, makes me nervous. So make sure that if you're buying in the Midwest, it's going to be the Midwest that has the highest cash flow. Just make sure you're in cities that are really reinvesting in themselves, which again is why I like Cleveland. It's why I like Detroit. Billions of dollars have been invested to bring those cities back. Pittsburgh is a great city for that. Like I said, St. Louis and Kansas City. If you were to buy right now with a focus on balanced cash flow and appreciation, which market would you invest in? I would go to Atlanta, Birmingham, Orlando, Jacksonville, Tampa, all of those areas cash flow pretty well, and the appreciation is likely given the amount of people moving to those areas. Will it be harder to get mortgage loans when buying homes during a real estate crash? Yes, I mean, possibly. In the past, it was really hard to get loans. Well, not really. I mean, actually in 2009, when the market was completely falling apart, lenders went from unlimited investor loans to 10. And it wasn't that much harder, except that it was like full doc. You had to go from no doc before, which was just dumb, to full doc, which means you got to show that you have the ability to afford that rental home. So even in the worst of the last housing recession in 2009, you could still get up to 10 loans if you could truly qualify. So I don't necessarily, I mean, yes, it was harder, but it was the right kind of hard. Like if you're going to have a portfolio of investment homes, of rental homes, you need to prove that you can actually afford to have those. So I don't see any kind of, it's really hard to predict a market crash in housing in the next 5 years because there's such limited supply of housing and so much demand. I didn't really present that on today's presentation. I will at the live event to show the massive demand for housing in certain areas and the massive lack of supply. So most economists are predicting that home prices will actually rise over the coming year, not fall, and that rents will rise over the coming year, not fall. Most people are not predicting a recession in 2020 because President Trump is going to do everything in his power to prevent that, and that's what we've seen already through different stimulus programs. Not to mention the tax cuts, but also the recent quantitative easing that nobody's talked about in October. So even if we were sort of heading into recession, it was totally mitigated through quantitative easing just this past fall and through the lowering of rates. So very unlikely that we would see any kind of crash this coming year. But then it's like, what about after? What about if we have a new president, and what happens if there is a recession in 2021? And when I say recession, I mean gross domestic product goes negative. It means our economy slows down that way. Would it affect housing? It would not affect housing the way it did last time. Last time we were in a situation where people could not afford to pay their mortgage, and they never could have, even when they originally got that mortgage. They were never in a position to pay that mortgage. They never had to qualify. They never had to prove their ability. They just walked in and got a loan and faked their income. So when it came time to actually make the payments, they couldn't, but they never could. The difference after that was when Dodd-Frank came in and totally revised what it takes to qualify for a loan. And it's full doc. You have to prove that you can qualify. Very, very different situation. So anyone who got a loan in the last 10 years had to prove that they had the ability to get that loan. And since then, they've most likely seen values go up on their properties, and they've seen rents go up, but they're locked into a really low payment. So why on earth would they walk away from a home where they have a low payment just so they can go rent for 3 times as much? They're not going to do that. So I really don't see a housing recession coming, at least there's at least not till 2025 in housing. Now there could be a recession in the stock market or in GDP, a pullback there. There could be job losses, but like I said, there would have to be 7 million job losses for us to even kind of be at equilibrium. And I agree, Peter. I agree. I won't talk politics, but I'm with you there. What do you think of turnkey deals that cash flow $100 to $150 a month, but cash on cash comes out to be around 4 to 5%? Many people look only at returns. Is that always the best way to vet deals? Um, you know, there's so many factors that go into it. If you have one property in California, you maybe paid $400,000 for it. Now it's worth twice that, but your rents haven't gone up twice as much. You might be in a position that it makes a lot of sense for you to sell and buy 5 or 6 properties elsewhere. Now you're diversified. Now, if you have vacancies, you've got other properties that can cover your basic costs. Um, I'm guessing if you're selling a property in California, you're going to have better cash flow anywhere else anyway. So you're going to be better off, diversified with higher cash flow. So again, it just depends on the situation that you're in. Bottom line is, if you go back to the basics of real estate, if you really go back to the fundamentals, you've got this opportunity to borrow to borrow money from a bank to acquire an asset that somebody else pays off for you. They pay off that loan for you. So you borrow the money, you buy the asset, you get all the tax breaks, somebody else pays off your debt for you, and you end up over time with a property that you own free and clear that somebody else paid off for you. So when you really think about the big picture and holding it, maybe you're only getting $100 to $200 a month cash flow today, but what about in 5 years or 10 years? Remember, rents will have gone up in that time, but your mortgage payment has stayed the same. It's locked in for 30 years. So even if it's only $100 cash flow today, it might be $200 cash flow in 5 years, or 300 or 400 because of that. So I would look at, sure, it cash flows today. It could cash flow even better in the future. If you buy it renovated or new, you will have hopefully less repairs to worry about in that time frame. If you're in an area where there's job growth and population growth, you'll probably see some appreciation too, especially since there's areas with just a tremendous lack of housing that when there's so much demand, there's a good chance rents and prices will continue to rise, at least for the next 5 years. So yeah, there's definitely more to look at. It's a long-term play. And I assure you, if you buy 10 properties that only make $100 cash flow now, in 10, 20, or 30 years, it will be a very different story. Much higher cash flow, much more equity. Buy young, sell old, yes. Should I buy cash or bank's money? If you can get cheap money, always go with the cheap money, but have enough equity and make sure that it still cash flows. If you have a credit score in the high 700s and no debt, do you have to put 20% down to qualify for the 10 investor loans? Yes, 20% on the first 3 or 4, and then after that, they'll require 25%. You only can get the 3.5% down on your primary at this time. There may be some investor loans I don't know about that allow you to put less down, but for the ones that I know, and certainly conventional, it's 20% and then 25% after 3 or 4. So if you're buying a primary, that might be your best first option because it's only 3.5% down. But if you're in California, that's going to be still a lot of money. Somebody said, I bought a $60,000 home in Indianapolis and it was a nightmare. Don't do it. I agree. Don't do it. What parts of Texas would you recommend for cash flow? Houston seems to be better than Dallas, but there's suburbs or exurbs of Dallas that you can still cash flow in. You would want to talk to the teams from Houston and Dallas to really look at the numbers closely. But so over the years, Houston seemed to have a little bit higher cash flow than Dallas. But Dallas has maybe stronger growth. Well, they're both strong. I'm Canadian and had the opportunity to join your first tour in Detroit. I agree that the U.S. is still one of the best places to find real estate. Maybe you can talk about finance options for non-U.S. residents willing to invest. You know, nice to talk to you. I'm glad you could be here. There are more and more portfolio lenders offering loans to non-US residents. So that's the good news. 5 years ago, there wasn't. Today, there is so much money circulating looking for someone to borrow it. So talk to an investment counselor at Real Wealth and find out who some of those lenders are, the portfolio lenders. You're going to pay more. It's going to be a higher interest rate, but it might still really work. What are your thoughts on Detroit? First time investor looking for low price point. Again, there's parts of Detroit that are really great, really good neighborhoods that have been appreciating, parts of Detroit that have been totally revitalized, but there's a lot of neighborhoods that are just a nightmare. So you want to have a really good representative there. Definitely talk to the team that we recommend in Detroit. They have had a really good track record, and the biggest complaints we've had is that they're sometimes too busy or they don't have enough property because it's been in such high demand. We have people who've bought dozens of properties from the Detroit team and have been really happy. Thank you. Some people wishing me a good 2020 and the same back at you. How much reserve should you have if you have 6 rentals? Usually 6 to 8 months reserves per property. So if the rent's $1,000 a month, I'd have $5,000 set aside. $10,000 would be even better to give you peace of mind. Treat it like a business, like any business. You have to have reserves. You don't know what kind of things and what surprises might come to you. So you just want to have those reserves on hand so that when those surprises come, you're not surprised. You're ready. Let's see. Arizona, Phoenix, Albuquerque. Phoenix, I really like Phoenix, but it's just gotten expensive. So if you go out into the suburbs, maybe you'll be able to cash flow. Albuquerque, we have a good team there. Albuquerque still has pretty low salaries, low income. Parts of Albuquerque still have some pretty serious drug problems, but there's also a lot of changes happening with Netflix kind of moving to Albuquerque and a lot more of the movie industry moving there and other things. It's definitely worth looking into. Somebody said they like Las Vegas. It's booming. Yes, it's booming. Cash flow is not as good there, and you have a lot of people with low wages. But I've been wrong about Vegas. We should have had a team there 10 years ago because prices have gone up. Phoenix and Vegas made me super nervous because there were so many investors going in, and just when there's an area with too many rentals, it can really affect the neighborhood. But that did not happen. I mean, Phoenix and Vegas just took off. So I did not see that. But now it may be too late. You'd have to maybe look into Henderson or an outer lying area for the cash flow. Someone just sold a single family, closing on a 4-unit on January 13th. Congratulations. Plan to have 20 units by the end of the year. Well, that's just in time for the millions of renters who will be looking for a home to rent. When do you have events in the Bay Area? We have our upcoming January event. It's our most popular event of the year. Rich will be speaking, and I'll be giving my full 2020 predictions. This is just part of it. So that's January 11th in San Mateo and January 12th in LA. And then we have our East Coast event on February 8th in Jacksonville, when all of the teams will be there from around the country to tell you where the most rental demand is in their area. Can you pull permit history on houses that are not yours if you're wanting to buy it? I would think so, but I guess you could ask for it from the seller. I would think that would be public record, but you'd have to ask the local planning department. What's the best strategy to increase cash flow? What do you think as flipping as a way to generate cash flow, keeping one flip out of Ford and continue? Yeah, I know a lot of people who have flipped a couple homes and then taken the profits to buy a cash flow property, or they have done the Burr model where they buy a distressed property, fix it up, and refi it, get all the cash out and go do it again. So that's a great strategy. It's just you need the time and the expertise to be able to pull it off. Given the option of 20 versus 25% down on a single family rental property, do you have a preference and why? Um, with conventional finance for the first 3 or 4 loans, you can put 20% down, and after that, you have to put 25% down. Do I have a preference? If you can put less down and it still cash flows, I would do that because I'd rather have the funds sitting in reserves. I'm looking for a strategy to build up cash flow. What do you recommend? It depends on what you're looking for. Sometimes investing in a syndication that you don't have to deal with it at all, like a rental fund or a private lending fund that pays 6 or 7 or 8%, and you don't have to do anything. That might be a better bet if you're wanting to go sail around the world and not worry about your properties. If you're looking to build a rental portfolio and you don't mind being a bit hands-on, then certainly buying in cash flow markets, like I said, in the Midwest would be a way to do that. In 2020, buy, sell, or hold. Yes, yes, yes. In 2020, you probably want to sell your high-priced property that doesn't cash flow as well and exchange it for high cash flow properties in the path of progress. So in other words, selling your property in California or in anywhere where you've built up a lot of equity, and if you looked at the value of the property versus the income, if it's close to the 0.7%. So in other words, if you have a $100,000 property and it rents for $900, you're making pretty good cash flow. If you have a $1 million property and it's renting for $3,000, but if you paid $300,000 for it once, you think that you're getting good cash flow, but you have $700,000 sitting there doing nothing. So sell your properties with a bunch of equity and buy high cash flow properties in the path of progress. That's a great way to prepare for coming times. Huntsville does seem to be hot right now. It's mostly because there's a lot of military there, and you can basically rent your home to a rocket scientist. There's just a lot of military growth in Huntsville, and the prices are still low, but it's really hard to find inventory there. What if Trump is impeached? Well, he was, but I really doubt it's going to go anywhere before the election. The real question is, will he get reelected or not? And nobody really knows. Should we sell California properties? I would. If you're hoping for more appreciation in California, it's probably unlikely because it's really hit a ceiling in most areas. Not all areas. There's some areas where you might still see appreciation, but you're not getting cash flow probably. You're probably not getting appreciation. You're probably not going to be able to push rents up much higher. We've hit a ceiling. So it's a great time to sell your California properties and get into properties that have better cash flow and still have a chance of appreciation. You can sell one and potentially buy 10 somewhere else. So you've really diversified, and if you have one vacancy, it won't affect the portfolio the way it would if you just have one property. Is the complacency in the private syndication space for CRE, that's commercial real estate, a big enough trigger for a financial crisis? It depends. I don't think so, though. There's a lot of multifamily properties that I don't think are going to go as expected. But if I don't, here's what I think is happening. There's a lot of people that are over leveraging their multifamily, thinking they can push rents, and that may not happen. And if values go down in multifamily and the banks foreclose because the debt service isn't being met, then they'll just sell them at a discount. I don't think it will really rock the real estate world. I think it will just be a great opportunity for investors. That's just my personal opinion. What do you think of Bakersfield? I don't know enough about it, but I think there's probably an opportunity in parts of Bakersfield. I know Fresno there is. Pro formas show cash on cash based on current year. Is it right to say cash on cash increases as rent increases? I think so. It's the kind of the cash you have into the deal versus the income you're getting out of it. So as rents go up, yeah, you'd get a better cash on cash. I don't know if that's the formal answer, but that's my answer. Do you see do you foresee negative interest rates? And if so, how would it affect the mortgage payment? If we're really looking far into the future, who knows what's going to happen? If we have a deep recession and there's not really anywhere for the Fed to go to stimulate, it could go into negative, but unlikely anytime soon. And other countries are trying it, and I'm not sure it's going that well. So I think the most important thing our country can do is do what it's always done and create more great innovations. If we can really invest in companies and entrepreneurs and innovative technologies, we have the chance to overcome some of our debt problems. So hopefully our government will continue to support business and not punish it. Would also love to hear your thoughts on the Mountain West. I live in Colorado. I don't know that. Oh, yeah, there's been a lot of appreciation in Denver. Hard to get cash flow there. Colorado Springs might still have an opportunity, but yeah, prices have definitely gone up in Colorado. There are other markets where you can probably get higher cash flow.